was going to ask her about Japanification. So maybe one of the reasons you've been studying Japan a little bit, and correct me if I'm wrong, but is this because everybody seems to draw that analogy with where the rest of the Western world may be going to maybe where Japan has been for the past 20 odd years, and how has that informed your view of Western worlds and some of the economic indicators that you think are relevant for us all to be watching at this point?
Yeah, exactly. I've dived into it for two main reasons. One is just as an investment opportunity. It's kind of a market that I think is pretty interesting, especially in the past few years. And then secondly, it also informs that broader view of what is inflationary, what is deflationary, what are some of the factors involved. And so I think I kind of call it a mistake where a lot of people look at Japan and assume that that's the natural end state for all developed countries, for better or worse. Usually they describe it as a bad thing, whereas if you go into the details, it's not quite what people make it out to be. Another thing is that they often describe it as that Japan just prints a ton of money, and so for example, if you look at their central bank balance sheet. I think I can bring it up here because we talked about potentially sharing slides. So let me see if I have it. Yeah. So I'll share my screen here. And do
You
you see
should
my
place it.
screen?
Uh, there we go. Uh,
Yep.
yes.
Yeah. So you guys see this chart?
There you go. Yep.
Yeah. So you can see basically this is the Bank of Japan balance sheet, and it just went completely vertical here. And so a lot of people describe that as, well, if Japan can print an absolutely massive amount of money and not have inflation, then that kind of shows that if Europe or if the United States does it, it's not going to be inflationary. But it's a little bit more complicated than that. And so, uh, kind of diving into some of their mechanics are things I've looked at. And so, if you look at that chart, it looks really parabolic, and indeed. Their balance sheet is now larger than their GDP, and so they own something like 120% or whatever. I think 130% now of the size of their GDP, whereas the Federal Reserve is more like 35% of the United States GDP. However, if you look at their broad money supply, so the amount of money that's actually in checking accounts, in savings accounts, in currency in circulation, the broad money supply that all the corporations and people have access to, that's grown far, far slower than the United States over the past 10, 20 years. Per capita, it's grown something like 2.9% over the past 20 years, whereas the euro grew at 5.6% per capita or something like that, and the United States dollar grew at something like 6.2% per capita. So it's more than twice as fast broad money supply increase as Japan, even on a per capita basis, let alone if you take into account population growth differences. And so just because that balance sheet's going vertical doesn't mean that the amount of broad money supply is going vertical. And so that's one really big difference that people don't pay attention to. Whereas this year, United States money supply went up 25% year over year. In 2020, Japan and Europe, you're looking at something like 10 to 12%. So about half the rate, maybe a little bit less. And so all of those environments are very different than they were over the past 20 years, and especially compared to what Japan's been doing, because they've been growing money supply very, very slowly because there's not a lot of private credit creation. And also, even their sovereign deficits, even though they've been somewhat large, they've been smaller than the United States in many years, and especially smaller than the types of things that are happening now. So I don't necessarily view it as an ideal analogy for where a lot of these other places are heading, other than that we are, of course, on a similar demographics trend. Another thing that's a big difference is that Japan has a structural current account surplus. And so, over the decades, they amassed a very big trade surplus. So they exported more than they imported because they were known for high quality industrial production, cars, and other things like that. And even as that kind of moderated in more recent times, now they have a somewhat more balanced trade situation. But due to years of doing that, they've accumulated a lot of foreign assets. And so, if you look at the net international investment position, which is basically how much foreign assets do Japanese people own compared to how much Japanese assets does the rest of the world own. And by that metric, Japan's the largest creditor nation, meaning that in absolute dollar terms, they own more foreign assets. The amount difference between the foreign assets they own minus the Japanese assets the foreigners own is the biggest in the world. And even as a percentage of GDP, it's one of the largest among major countries. It's kind of tied with Germany, and then it's only only countries ahead of it are like city states, like smaller things like Switzerland, Singapore, Taiwan, some of these really smaller, more specialized economies that are a little bit less diversified. And so, in that sense, it's very different than the United States, which is on the total opposite side of that equation. We have the deepest negative net international investment position drawdown. So we're our net debtor nation. So foreigners own more American assets than Americans own of foreign assets, and we run structural, persistent trade deficits and current account deficits. And so we're on the kind of the opposite side of Japan there. And so I've dived into periods where the yen strengthened or weakened, and a lot of it has to do with their current account surplus keeps the yen relatively strong, all other factors considered. And so basically, Japan has a lot of kind of unique attributes that don't necessarily translate well to the United States, for better or worse. Like we don't have the trade surplus they have. We don't have some of the attributes they have. Whereas Europe, for example, does look somewhat more like Japan. They have the current account surplus. They have the more aged population, but they have their own set of risks. So they're not monetary sovereign the way that Japan is, because all of the countries have shared their currency, and so you have that big difference between, say, Germany and Italy, whereas you don't have that kind of fracturing happening in Japan.
And so, what are the downstream implications for that for Japanese asset prices vis-a-vis sort of global asset allocation?
Well, so a couple of things. One is overall, Japanese equities are actually pretty interesting. And so if you look at the 30-year bear market, it bottomed really during that 2009 to 2012 period, and then since 2012, it's actually been one of the strongest bull markets globally. And it's like the bull market no one talks about. It's just as their central bank balance sheet went vertical, their stock market started going vertical, and so. Partly because the Bank of Japan buys Japanese stocks, but then the funny thing is they're not even overvalued. And so if you look at what most of their companies look at their growth rates, look at their balance sheets, look at their earnings multiples, price to book, price to sales, whatever metrics applicable for that type of company, they're actually pretty reasonably valued in many cases, and they have increasing corporate governance, and they've been through a multi-decade deleveraging process in many cases. And so overall, I think there's a decent opportunity there. And then it also, suggests that just because the Bank of Japan had very loose monetary policy for a long time doesn't necessarily mean that the United States can, do similar things and end up with similar deflation. So I think that if the United States takes, some of these actions, we're more likely to get this more reflationary environment, for better or worse. And one example I've used is that prior to 2020, Japan never ran a government deficit bigger than 8% of GDP, whereas we just ran a 15% GDP deficit, and we're on track to potentially beat it this year. And with the Federal Reserve buying a lot of the bonds associated with that deficit, that's basically just a very different environment in terms of fiscal monetary policy than what Japan's done, because we're not just increasing our base money, we're increasing our broad money supply.